China's central bank digital currency, the digital yuan, is set to make its international debut at the Beijing Winter Olympics next week. Athletes and spectators are already testing it out, and about a fifth of the country's population has already downloaded digital yuan wallets. Joining us now to discuss is Michael Sung, founding co-director of the Fintech Research Center at the International School of Finance at Fudan University. Welcome, Professor Sung. So can you set the stage for us of what to expect at the Olympics and this digital yuan?
Yeah, so as you know, China's been researching and actively developing their digital yuan, what we call the e-CNY, since 2014. It went into 4 testbed cities last year and has been grown into major deployments and pilots across the country, all over the most economically important parts of the mainland. And now we expect that there's going to be an additional pilot that will be happening during the Beijing Olympics, right? It will be likely to include the ability for the foreign athletes to be able to download a digital wallet to be able to transact in the country without bank accounts. That's a new pilot scenario for Beijing. Most of the piloting has been on the mainland, and now we're seeing some light testing in areas like Hong Kong and Macau, cross-border, mostly for Hong Kong citizens to be able to transact on the mainland. So we're seeing an extension, therefore, of the testing to a larger scale. As you mentioned, there's about 261 million digital wallets that have been downloaded. That's double just from a couple months ago. There's been about $14 billion worth of transactions now, so that's scaling as well. We will see, but most likely this will be a rollout that will occur over time. So unlike, I think, expectations of many in the international media, it won't be an immediate, commercially scaled deployment at e-CNY. Most likely, continuing testbeds will occur.
Hi, Michael. It's great to have you here from on the ground, center of the action. So can you just tell us, how big a deal is this really, right? I mean, it's getting a ton of headlines, a ton of press, but as we know, China already has one of the most advanced mobile payment systems in the world. There are, Alipay, WeChat Pay. So why is this such a big deal? What is this transformational effect that everybody's talking about? Is it supposed to be transformational domestically or internationally? If you could just put into perspective why the world should care about this development.
Yeah, so, I think really what's happening in China is one of the main catalysts for the research and development of central bank digital currencies around the world, right? So I think the initial catalyst was actually the Facebook Libra, which was announced in June of 2019. But because of that happening, Wu Cangcun, who was the Digital Currency Institute director, kind of rushed back to Beijing, and Beijing had decided to, rapidly increase its timetable to be able to deploy their e-CNY and take a sort of world-leading position in that. So by the end of that year, Xi Jinping announced that China was going to commercialize the e-CNY. And I think this is really a wake-up call for everyone around the world. A couple of years ago, central banks didn't talk about this, but because of these sort of catalyst moments, I think the writing was on the wall. Governments around the world have begun to really look into this. Now we have over 90 central banks in various stages of development. 16% are actively piloting. We have 9 central banks that have issued their own digital currencies. So I think this is a very, very important transition, right? Because we're moving from the traditional sort of SWIFT-based payment network across the world and leapfrogging into the digital world, and that has potential disruptive impact on the international monetary system, right? Because now in the future, countries will be able to issue their own digital currencies. These digital currencies will be able to transact with each other bilaterally and then settle without the intervention of the traditional banking monetary system potentially. And it might even have repercussions on, for example, the use of the US dollar as a reserve currency. Because if you can bilaterally settle without any intermediary sort of currency, then the use of the US dollar might be affected.
Thanks, Michael. Actually, I completely agree with you. I think the biggest effect of this has been sort of the ripple effect across the world. We have so many countries now kind of racing to catch up with China. So that brings me right to my next question. There's a very heated debate right now in the United States about if we need a digital dollar or not. And on one side, you have people saying, like, we absolutely have to for the reasons you just said, because it's threatening the US dollar's status as a reserve currency. But then you have other people saying the US cannot go down this road because CBDCs are ultimately not privacy protecting. What is your view? Does China's CBDC mean that the U.S. needs a digital dollar, or should the U.S. just keep doing its own thing?
Yeah, so I think really China's one to watch because they're one of the first major economies to be able to potentially issue their e-CNY. And but I think it has a limited impact in sort of even the medium term, right? Because China stated very clearly that it's going to be a mainland affair only, a domestic affair. And it's only meant to replace M0 money, i.e. cash. So its influence on the international monetary system is limited. Okay. However, as I mentioned to you, the cat is out of the bag. Okay, so it's not China. It's the fact that 86% of central banks around the world are all going to do this. And within a sort of a 3 to 5 year timeline, we're going to have a digital euro, we're going to have a digital krona, we're going to have a digital naira. So everybody's going to have these digital currencies, and then when they do, they're not going to need to use the traditional international monetary system. Now, my view on what's happening in the U.S. Is that the U.S. needs to take a leadership position in this. Right, the Fed actually just issued their long-awaited, long-delayed reports. They've been working, the Boston Fed have been working with the MIT Digital Currency Institute to research this. I have to say, in my opinion, is that report was highly underwhelming, right? In the end, it was inconclusive. They did not say whether or not they were supportive of this. The detail in the report was rather generic. And so I think, the U.S. is going to probably slip behind on the development of the digital dollar vis-a-vis other countries. And this is a classic case of the innovator's dilemma, right? Where the incumbent power, in this case, the U.S., with this existing technology or ecosystem, which is SWIFT and the U.S. dollar, wants to maintain that position. And in so doing, they really fall behind to the just disruptive impacts of the next generation technology. And so I think, my suggestion would be that the U.S. Try to regain leadership in this, right? They're really being left out of what's really happening around the world, right? In Asia, in particular, in Hong Kong, and more noticeably in Singapore, they are really leading the world these days on the regulation of digital assets and the deployment of very vibrant digital currency ecosystems. And the U.S. does not have a seat at the table. So I think the advice would be to really take this seriously, understand that the digitization of value is a phenomenon that will happen without the U.S. involvement, and the U.S. should try to play catch up.
What role did you were talking about the development, for instance, of central bank digital currencies and also stablecoins? So what role did stablecoins have in encouraging China to do this crackdown over the past year on cryptocurrencies that we're seeing in mining and what have you? Did the government take a more, let's just say, hostile approach to some aspects of market cryptocurrencies because of capital control questions, or were there other factors involved? I mean, it's always cited the environmental and energy use impact, but was it also a concern that people were buying stablecoins in the over-the-counter market? I mean, how much of that came into play here?
I don't know if stablecoins, just really quick, is a very important aspect of the market. In 2020, it's gone over 20x, is now about $150 billion industry, growing, I would say, exponentially. trillions of dollars of transactional volume. So it's a very, very important phenomenon that was kickstarted by the DeFi phenomenon. Now, I think stablecoins had less of an issue with what's happening in terms of the regulatory climate in China, rather than just sort of unregulated crypto, right? So because China right now, if you've noticed, is taking a very strong regulatory, sort of stance with what they consider unregulated industries, right? And unregulated crypto, things like ICOs, things like Bitcoin, they view as being potentially disruptive and causes instability in the financial ecosystem, and that's what they're worried about the most, is the financial instability, of the market. So they've had multiple sort of, I guess you would call them crackdowns. This latest one, where they've basically outlawed Bitcoin mining, and they outlawed the ability for Chinese citizens to convert RMB into OTC, or to be able to transact in crypto, is quite major, and I think it will be a sustained thing. And I think what that is setting the stage for is cleaning up house of the unregulated digital asset market, and then paving the road for regulated digital assets, starting first with the e-CNY. But I think the other thing that I've been talking about to look out for is China is going to take a world-leading position on regulated digital assets, things like digital securities, right? So already we have, for example, Yao Chen, who was the founder of the DCP, the original project behind the e-CNY, has now moved over to the CSRC, which is the SEC equivalent of China, and are looking at applying blockchain to the registered digital securitization. So we see big moves for China in preparation to be able to regulate this across the board. But when they do, they will, in fact, be a dominant powerhouse in the development of this entire new world.
Wow. You mentioned the crackdown on crypto mining, Bitcoin mining. I wonder, do you think, will it ever come back? And a lot of advocates of cryptocurrencies praise the decentralizing force of it, the self-sovereign power that it can give you, but this seems to turn it on its head, and it could potentially create a system where we are more surveilled than ever in our transactions in our financial system. And so I wonder if you could speak to that. Is that a clear result that could come out of this?
Yeah, I think there's been a lot, especially in the Western media, talking about the surveillance capabilities of China. Actually, I kind of have a different angle on this, right? China's digital payments, or mobile payments market has been around for quite a while, being dominated by the duopoly we call WeChat Pay and Alipay, which own 96% of the payments market in China. Frankly speaking, China had always had the ability to be able to, go and monitor the transactions within Alipay or WeChat Pay anytime they want. This has been a known thing. So actually, the e-CNY does not really do anything to extend the surveillance capabilities of China. It has already existed in that form, and also, in fact, the PBOC in developing the e-CNY has actually spent a lot of, I would say, thought in designing a system that is relatively privacy driven. In fact, if you look at the architecture and you actually look into the technical details, the PBOC, as example, doesn't even have the ability to be able to connect the transactions to phone numbers and things like this. They have to go through a subpoena to do that. So actually, I think the privacy design of the DCP is actually well reasoned. They don't have an interest in monitoring every single microtransaction in the country. They want to monitor sort of large payment flows, because that is where money laundering, terrorism financing, and this type of bad behavior occurs. So they want to monitor the gateways of what happens. And I would say that that's actually well reasoned. That's not only China, the whole world of every government wants that. And in fact, the existing international monetary system already does some form of that, right? If you have a transaction over $10,000 US dollars going across international SWIFT, it's being flagged somewhere and somebody's monitoring it. So I think it's all about balance, right? You want to be able to have capabilities to monitor compliance and, to prevent nefarious things from happening. At the same time, you want to be able to monitor transactions at a level that would be useful potentially for fiscal or monetary policy. But you don't want to encroach on the individual privacy of individual citizens. And I think they've struck that balance reasonably well.